What's driving markets? Welcome to Market Take. Each week, we'll bring you our insights on the latest market and economic trends that are impacting investments. I'm your host, Axel Christensen, Chief Investment Strategist for Latin America at the BlackRock Investment Institute. This week, we unpack why we think emerging market returns can deliver again. We think emerging markets can deliver again after a stellar 2025. They're supported by an upbeat macro outlook with stable inflation and disciplined policy. But we stay selective, focusing on mega forces driving returns. The MSCI Emerging Markets Index notched a 9% gain last month, well above the 2.2% gain in its developed markets counterpart. Performance has broadened out beyond the AI theme, but we still see significant dispersion. South Korea, for example, has surged 21% while India is still lagging. That means an active approach is key in our view. We see several broad factors driving emerging market returns. Solid global growth gives emerging market economies a stable backdrop, even with sections of episodic policy-driven volatility. Potential rate cuts as the inflation outlook improves are also supportive. And easing trade uncertainty could encourage further capital inflows and firmer currencies. In addition to these macro factors, mega forces like AI are also helping drive returns. Emerging markets are key to the AI build-out. South Korea and Taiwan, leaders in manufacturing AI hardware, stand to benefit as the U.S. hyperscalers spend even more on the AI than expected. And the industrial metals needed to power the technology are largely located in emerging market regions. Supply chain constraints could push up commodity prices, another potential boost. We are overweight hard currency emerging market debt. Elections this year could lead to currency volatility, a reason we prefer hard currency debt to local currency. We also like high-yield emerging market issuers and think increased dispersion could create opportunities for active returns. On the equity side, we favor markets benefiting from even more AI capex. We favor leaders in China's new economy, AI, automation, and low-carbon energy. And we see rewiring global supply chains and stronger commodity prices benefiting Mexico, Brazil, and Vietnam. Here is our market take. We see the bullish themes that drove emerging market outperformance in 2025 still playing out, though we think selectivity is key as dispersion rises. We prefer emerging market hard currency debt and stay selective in emerging market equities, preferring stocks that benefit from mega forces like AI. For details, read our weekly market commentary. Go to www.blackrock.com/weekly-commentary. Thank you for tuning in, and if you enjoyed this episode, subscribe to Market Take wherever you get your podcasts.
This content is for informational purposes only and is not an offer or a solicitation. Reliance upon information in this material is at the sole discretion of the listener. In the UK and non-European Economic Area countries, this is authorised and regulated by the Financial Conduct Authority. In the European Economic Area, this is authorised and regulated by the Netherlands Authority for the Financial Markets. Reference to the names of each company mentioned in this communication is merely for explaining the investment strategy and should not be construed as investment advice or investment recommendation of those companies. For full disclosures, go to blackrock.com/corporate/compliance/bid-disclosures.